Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money games the big companies play. And let me tell you, Robinhood Markets Incorporated has been playing a very interesting game lately in their latest amendment to their 10K filing. It looks like they've been busy fixing some formatting errors and adding some fresh certifications. But what we really want to know is what is going on under the hood. You know, the financials, the risks, the future plans. So buckle up because we're about to decode Robinhood's latest financial story. And trust me, it has got more twists and turns than a meme stock rally. Alright, let's dive headfirst into the numbers for the year ending December 2025. Robinhood's total net revenue shot up by a massive 52%, reaching $4.47 billion compared to $2.95 billion in the previous year. That is a significant jump, meaning they're bringing in a lot more money compared to last year. And it is not just revenue that is looking good, their net income also saw a healthy 33% increase, hitting $1.88 billion, up from $1.41 billion last year. Translating this into simpler terms, this means their profit after all expenses has grown substantially, showing they are becoming much more profitable. Now let's talk about their customers. Robinhood had 27 million funded customers by the end of 2025. That is an increase of 1.8 million people compared to 2024. And what are these customers doing with Robinhood? Their total platform assets, that is the value of all the investments held on their platform, surged by a whopping 67% to $322.1 billion. This massive asset growth was fueled by net deposits, which reached $68.1 billion. That is a lot of new cash and assets coming into the platform from their users. And get this, their Robinhood Gold subscribers, a premium service, grew by a massive 58%, hitting 4.18 million people. That is a lot of users willing to pay for extra perks. When Robinhood looks at their core business performance, their adjusted EBITDA, which is like a special profit measure for the business, soared by 76%. This shows their main operations are becoming more profitable without some of the accounting tweaks. Looking at their expenses, technology and development costs increased by 10%, mainly due to more spending on software tools and cloud services, which makes sense as they continue to grow and acquire new companies. They also poured more money into marketing, spending $127 million more than the previous year, largely on digital and brand. Marketing this shows they want to get the word out and attract even more users. Brokerage and transaction costs also went up $47 million, mostly due to more money spent on the people who keep the brokerage side running smoothly. Now, for the tricky part, their provision for credit losses increased 50%, mainly because of higher balances in purchased credit card receivables. This means folks are carrying more debt on those Robinhood credit cards, and Robinhood is setting aside more money just in case some of that debt isn't paid back. In terms of borrowing money, they've been busy too. The Robinhood Securities LLC March 2025 credit agreement has a total commitment of $2.65 billion. This is basically a big line of credit they can tap into if needed. And guess what? Robinhood has been buying back its own stock. They spent 831,629 shares in the last few months of 2025 for a total of over $590 million. This can sometimes signal that the company thinks its stock is a good deal. Robinhood's strategy is pretty clear. They want to be the go-to place for active traders, and they are working hard to capture the next generation of investors by offering a whole ecosystem of financial products and services. One of their major goals is to become the #1 global financial ecosystem, meaning they want to expand beyond the US and offer their services worldwide. But it is not all smooth sailing. Robinhood operates in a super competitive market, facing giants like legacy financial institutions and fast-moving fintech startups. Their success depends on constant innovation and keeping their customers happy, which is no easy feat. And then there are the risks, which are plentiful. Cybersecurity is a huge concern for them. A breach could seriously damage their reputation and cost them a lot of money. They also face regulatory hurdles, with new laws constantly popping up, especially in the crypto space, that could impact how they do business. A really interesting point to note is their stock structure class. A common stock has 1 vote per S-share, but Class B has 10 votes per S-share. This means the founders and their associates, who hold mostly Class B stock, have way more voting power than regular shareholders, which is something to keep in mind. Financially speaking, Robinhood had a strong year in 2025 with revenues and profits soaring. Their user base is growing, and they're bringing in a lot more money from users' investments and premium subscriptions. They seem to be executing well on expanding their product offerings, from crypto trading to credit cards, and even venturing into wealth management platforms they acquired. However, they are spending more on marketing and also setting aside more money for potential credit card losses, which is a sign that lending out money always carries some risk, even though their main business seems to be doing well. The acquisition of Trade PMR and Bitstamp did add a significant chunk of goodwill and intangible assets to their balance sheet, and this will need to be managed carefully going forward. It's worth noting Robinhood reports as one operating segment, meaning their chief operating decision maker uses overall company performance to make decisions rather than looking at each business unit separately. This might be efficient, but it also means it's harder for us to see how each individual part of their business is truly performing. Looking at the risks, Robinhood points out they are heavily dependent on their intellectual property and technology protecting. It is key to their competitive edge, and they're taking steps to do that through trademarks, patents, and agreements. But there is always a chance someone could infringe or that their protection efforts might not be enough. A really big legal story for Robinhood involves their event contracts. These are like prediction markets where users can bet on the outcome of events, and regulators like the CFTC and state gaming commissions are circling this could seriously impact what kind of contracts they can offer in the future. On the balance sheet side, their assets have grown significantly, especially cash and security segregated under regulations, and receivables from users, which have more than doubled this growth in receivables, is largely tied to their margin lending and credit card operations. This shows they are extending more credit to their users. Their additional paid-in capital has decreased slightly, which is typical when a company repurchases its own stock, as they did significantly this past year. Their net income and earnings per share have shown a dramatic turnaround from a loss in 2023 to significant profits in 2024 and 2025. This is a very positive trend indicating improved profitability and financial health. Looking at their cash flow, it is clear they are generating a lot more cash from operations in 2025 compared to 2024. This is a really strong sign that their core business is churning out cash efficiently. They definitely burned through cash in the past for investments and acquisitions, and also spent a lot on stock buybacks. When we look at the notes, you see they've been busy with acquisitions like Trade PMR and Bitstamp. These are big moves that expand their offerings and customer base significantly, but also add complexity and integration challenges. Overall, Robinhood Markets Incorporated had a very strong financial year in 2025. Their revenue and profit numbers are impressive. And they're attracting more customers and assets to their platform. Their strategy to cater to both active traders and new investors seems to be paying off. The growth in Robinhood Gold subscriptions and expanded services like credit cards and advisory platforms show a clear push towards becoming a more comprehensive financial services provider. However, the regulatory landscape, especially around crypto and their event contracts, remains a significant risk, and while their stock buyback program is a positive sign for shareholders, the concentration of voting power with the founders means smaller shareholders have limited influence on major company decisions. So what is the verdict? Robinhood is on an upward trajectory. Financially speaking, with impressive growth and profitability. However, they need to navigate the complex regulatory environment and integration of their new acquisitions successfully. The story here is one of strong execution and strategic expansion, facing potential headwinds from regulation and competition. Alright, that is our deep dive into Robinhood Markets Incorporated. Dad's latest filing. What are your thoughts on their financial performance and future prospects? Let us know in the comments if you found this breakdown helpful. Please hit that like button and subscribe for more corporate financial insights. And hey, don't forget to join our growing community on Discord. The link is in the description below. Thanks for watching, and we'll see you on the next decoding episode.